Well, hello and welcome YouTube. Sean Allison here, ready to present to you for this week's market update. Let's jump straight into it. So let's go to the charts. That's obviously the best place to start. We can see that the market is still in a strong uptrend. If we're looking here at the S&P 500, the best gauge of the overall stock market, we can see that the market is still using the 50-day moving average as a support level on the daily chart and is continuing to look strong. If we look at our opening range, which is 92% accurate, and we reset this actually on the first trading day of the month, so the first trading day of September, which is this day right here. So we set the high and the low of that day. That is a valid opening range to determine bullish or bearishness in the market up until the third Friday monthly options expiration. So we set the high and the low there. The last 2 days we've been neutral, and the market is, about 25 minutes into the open, and looking like we want to break down to the bearish side right now. So that's interesting. We'll keep a close eye on that. Doesn't really matter intraday where it is, it matters where it closes. So we'll be keeping a close eye on that, but a daily close below 4522 would be a bearish opening range on the SPX. We're still respecting that trend line that goes all the way back to when the pandemic first hit in March 2020. We're still above that at this stage, so that is no signs that it wants to move down at this point, and we will watch that 4522 level to see whether the S&P closes below that. Now, if we look at the overall market, just a quick snapshot here with our workspace. We can see right now that generally, again, the market is live right now, that the market is fairly flat right now, not doing a whole lot. When we look at the UVXY, that's up around 2%, which would typically show you that the S&P 500 is down, which is exactly what we're seeing. They move inversely to one another. Not dramatic. If this was 4 or 5% up, then you would expect to see the S&P 500 probably down by 1%. Or continue to move down. The higher this UVXY goes, the more the S&P 500 will sell off. But at this stage, nothing dramatic, not above that sort of 5% level. And right now, just fairly flat, not really doing a lot. All the major indexes are above their 21 EMAs or sitting right on their 21 EMAs, although as we speak, the industrials is actually below the 21 EMA. So right now, I spoke about this last week. The NASDAQ in a bull flag broke out of that exactly as I anticipated, and that's been very strong recently. The Russell 2000 has been a sideways trading range, as you can see, and is above the 21 EMA, slightly up today, but fairly flat, really. And not really a lot to tell from that. Nothing dramatically bearish, but we will be looking at that opening range to determine where we're likely to move next. Just simply because it works, right? So that's a pretty good reason. Now, are we seeing a double top here in the second largest sector, financials? Potentially could be a double top here. Be keeping a close eye on that. NASDAQ still very strong, healthcare still very strong, and the volatile biotech sector is still above its 21 EMA and looking relatively good. Nothing terribly bearish there, bit of sideways trading range here with the retail sector, and energy is probably the weakest sector at this point. But nothing overly bearish right now. So what have we been looking at? What are some of the things that we could potentially be looking to make money on? Well, we'll talk about that in a moment. Let's talk about the cryptocurrencies just briefly. Bitcoin, did break up above that 50,000 level. So it broke above that 50,000 level, got as high as around 52,500, and has now pulling back a little bit today. But still relatively strong. We'll see now whether that 50,000 level acts as a support level, and it does continue to move high around that 64, 65,000 all-time high. So keeping a close eye on Bitcoin. It is above that 50,000 level, which is quite significant. Now, if we look here at Ethereum, we can have a look at Ethereum right now, and this was a beautiful double bottom here. See this double bottom? We had one bounce there, another bounce there, beautiful double bottom there, and moving higher. We made some good money there, and then obviously a bull flag here, which I spoke about, and we broke out right there, having a move all the way up to 4,000. That was another great trade. So beautiful double bottom pattern here. And that worked out very nicely to the upside. Then bit of sideways trading range, which was actually a bull flag. We broke out of that and hit 4,000, which is a round number resistance level. So that's where we are right now, and that's also down today. So, fulfilled the objective with our bull flag. Now it's just wait and see, but have been performing pretty well. So that's what's happening there with the cryptocurrencies. Now, just a couple of them at least. Now, if we looked at, what's something that I sort of am in now? Well, PLTR, Palantir. I was just in a very conservative collar trade. Sean, what's a collar trade? It's where you buy 100 shares, sell one call option against those 100 shares for premium, to bring in some income, and then we just had a very cheap out of the money put option as an insurance policy, if you like, for your shares. Very conservative, something you would do potentially in a retirement account, and that's what we've got set up there. So, if this one works out, we'll make a 6.4% return in 32 days. What does it need to work out, Sean? Well, let's have a look. If we go to the chart right now of Palantir, which has huge potential going forward, has been as high as 45, but down at 26.47 right now. All it has to do is remain above 25. If it remains above 25 for the next 10 days, up until the 17th of September, we will make a 6.4% return on our money, which is very nice, right? So that's one that we're in now. One that I don't mind the look of now is Tesla. Now, there's a couple of different things you could do with Tesla. Is this a bit of an inverse head and shoulders here? Potentially. Breaking out here above this little level there. So that would be interesting. I mean, prior highs would be the next place, right? 780, this prior high would be the next place it would possibly go. And then obviously it's got 800, that psychological round number, as a resistance level as well. Probably 780 could be a reliable target that it would go to test these prior highs. Looks pretty reasonable, right? So a bit of an inverse head and shoulders there on the daily chart. If we look at the weekly, we want to see another close above the prior week. So this is something that can hold you in obviously very good stead for the week going ahead if you're bullish. This is the prior week. Now this week we've opened above that with little to no overlay of the real body of the candle. That's bullish price action right there, and likely to see Tesla move higher. We look at it on an hourly chart, just starting to break up now. So, what could you do with that? Well, you wouldn't do a covered call, something, $750 stock. It's relatively expensive to do something like that. You could just buy a call option, a long-dated call option, 90 to 120 days, right? You need at least 90 days if you're just going to go out and buy a call option. Not necessarily because you want to be in it for 90 days, but because time value is going to work against you when you just buy an option by itself. So how could you set something up on a relatively expensive stocks, $755 almost, and how could you set something up bullish, right? If you had a target there of 780 and you didn't have a lot of money, right? You didn't want to risk too much on the trade. You didn't want it to get outside your R. You need to know what your R is on every trade. What's your risk level? Maybe you didn't want to risk that much money, or you didn't have that much money, whatever the case is, and you wanted to still place a bullish trade on Tesla. What could you do? Well, right now sitting at 754 with a potential target of 780, you could do something like this. So you could use a spread, right? An option spread, right? There's so many different things you could do with options. They're very versatile, and you could do something like a call vertical debit spread. So let me just show you. So probably take this out to, let's take it out to the 15th of October. Okay, 15th of October here. That's the expiry. Okay. and I would sell the 760, buy the 750. Okay, so what's a spread? Well, you buy and sell an option at the same time. Okay, it's vertical because they're the same expiration, the 15th of October, about a month, about 5 weeks from now, right? And we're selling the 760 and we're buying the 750. So what's the aim of this trade? For the stock to move beyond your sold strike price, 760. So if it moves beyond that, say to 780, like we just looked at, what is the potential profit there and what could we look at here? Well, right now, with a bit of a move up in the stock from the open here, about about 34 minutes into the market, beyond the open there, about $513 a contract. Okay, so we know from 760, the sold strike, to 750, the bought strike is $10. So that $10 would be your maximum value of this spread. Okay, so $10 minus what you paid for it, $5.13 or $513 for one contract. That's how you're going to need that information to be able to work out what your potential profit is, right? So you're paying $513 for the spread. $10, the difference between the two spreads, 760, 750, $10 minus what you paid for it, $513, leaves $4.87. So $4.87 is your potential profit. The maximum value of this spread at any time is $10, okay? Per share you're controlling. One option controls 100 shares. So $487 is a potential profit if it remains above 760 or moves strongly above 760, and you could maybe exit this very quickly for a profit. Or if it remains above 760 up until the expiry, you could, and it does expire, you could have your maximum profit of $4.87 with a risk of $513. So, that's one way of doing it. I would probably like that to be just below 500. I try and get it like a 1-to-1. Now, you can use a profit taker and a stop loss to really get that asymmetrical risk where you've got twice as much profit potential as the risk that you're taking. And that's probably a good way to do it, right? Have your profit target set twice as high as what your potential risk is on the trade, and you'd use your stop to be able to do that. You can do that with these call vertical debit spreads as well. So, that's an idea. What's the advantage of that? Well, it's a lot cheaper, right? I mean, if you bought the 750 call, it'd cost you over $4,000, $4,040 to be able to do that. By using the spread, it's only cost you $513. So dramatic difference. You can trade higher price stocks and you can still benefit from them moving higher. So anyway, that was just something just off the top of my head, but that's something that you could do. Now, Tesla has done pretty well recently. If you look at this, I mean, there's a whole range of different things you could do. You could do a bull call, a butterfly spread. You could do an out of the money call calendar spread. There's a whole range of different things you could do, right? But if we just have a bit of a look here at Tesla, it beat on earnings, okay, $1.46 and $12 billion in revenue, compared to what the analysts expected, 96 cents earnings per share and $11.2 billion in revenue. So they grew their revenue 98.1% on a year-over-year basis. Very nice. So nothing wrong with that. Now, Tesla, if you wanted to have a bit of a look at it, just to analyze it quickly, you can see here, if we come here to Yahoo Finance, click on statistics, have a bit of a look at this company. We can see their return on equity is 12.27. Not too bad. I'd like that to be above 15 to 20% would be better, but that's not bad. Shows that the owners are getting a return for their investment in the company, and it's well managed. We look at the quarterly revenue growth year over year, 98.1%, very good. Quarterly earnings growth year over year, 998%. My goodness me, that's very good. And the total cash, $16.23 billion, is much higher than the total debt. So they're able to service debts even in hard times, and that's a good sign. Where are the institutions? There they are. Held by institutions over 30%, which is what I like to look for. 41% there, and insiders have a vested interest in this company being profitable. 18.96% of the shares are held by insiders. So they've got some skin in the game, and that's a good sign as well. You could click on here on analysis just to show you roughly how you would analyze a company. Just very quickly, this is just one way of doing it. You can see here the last 2 quarters, they have beat their earnings, right? The actual earnings was much higher than what the analysts expected in the last 2 quarters, so that's good. Are they likely to continue growing their earnings, right? That's what causes a stock to move higher, earnings growth, right? But are you paying too much for that forecasted earnings growth? That's a concept called GARP, G-A-R-P, growth at a reasonable price. There are different ways of measuring that, but you can see here the next 5 years earnings estimates 51.75%, which is obviously very solid. So, fairly solid company there, and it is, breaking up here, and 780 could very easily be on the cards, and you could make a nice little profit very quickly if it does continue to move up there with a higher price stock, even if you don't have a huge amount of money to be able to trade with. So that's an idea. Another position that we're in is with Riot, with a covered call. It's sort of pretty flat. It's about the same price where we bought it. Hasn't really moved very far, but we're still doing very well with the trade, right? It's still working out nicely for us. And what we've done is we've rolled our 40 call down to 35. So that has moved our break even down to 29.57. So the cost of the stock to us now is down at 29.57, which is obviously considerably below where it is right now. If it moves above 35, we'll sell our shares at 35 come the 15th of October, and we're looking for this to hold the 200-day moving average at this point. But anyway, we're managing that one. That one's working out okay. Facebook was another one that we spoke to you guys about, and still in that trade. That's looking pretty good. We set up a call debit vertical spread, very much like what I just showed you. Okay, so this is what we did last week on Facebook. Now we utilized the 15th, and what we did is we did a similar thing, right? Looking for it to move up, and we set the 370, 375, right? So let's just see what that's currently worth. Okay, so right now, trading at around $303 a contract. We bought it for $2.60 a contract, right? So we've got a nice profit in that one, and that one is working out nicely, and really looking for it to hold that 375 level. But at this point, we're about 20% profit in a week, and that one's looking pretty good. That was the other one that I spoke to you guys about. Palantir, we're still in that trade. That one's working well. We'll probably set up another position in Palantir if that does move down. FUBO was another one. Very good support level here at 25, as you can see there, right? Very good level at 25. We set up a bullish position there, and that is looking really good on that trade. We should exit that in 10 days time for a very nice return. So there are a couple of positions that we're in. Tesla looks good right now. I showed you an idea of being able to set that up. Facebook, we're still in that. That's looking good. And Palantir, and obviously FUBO as well. So there are a couple of ideas. Let me know if you enjoyed that, and if you'd like to see anything in particular. I can teach you guys some stuff, show you guys some things there if you wanted me to. Anything in particular you wanted me to demonstrate or show you. If you do want me to do that, or you give us some feedback, send an email to support@cashflowoptions.com.au. Cashflow Options, all one word with an S, cashflowoptions.com.au, and I'll be happy to oblige and help you in any way that I can. All right, guys, I hope you found that useful for this week. Let's see what the opening range is this week, and then we will have a little more clarity going forward to be able to really start lining up some trades. We'll see whether that 4522 level does hold, and very importantly, that trend line going all the way back to March of 2020. So they're the things I'm looking for. That's how we're making money right now. I hope you enjoyed that. Talk to you next week. My name's Allison. All the best, and bye for now.